Aloha, my friends. Welcome everyone to Java. It is Tuesday, and this is for August 22nd, 2023. So we are looking, as always, at our MMRI risk indicator to start with. Still clearly high territory. It has not come below that 275 mark. And it's even though the yields came back a bit yesterday and the markets had a bit of a run, but that's kind of, in my opinion, what we were talking about the dead cat bounce. And right now we're showing pre-market that the market is kind of expecting that to continue, at least off of the open. Volatility index is down. So less fear right now going back into these risky stocks, and they will stay green for the bit, at least in general. So we're watching this US 10-year, it's above that 4.3 again. And the market really doesn't like it there. We've got the dollar giving up some strength. It's also contributing to the prices going up. So we will keep an eye on that. A couple of stories that follow through. Stock futures gain as a treasury yield stall. And we've also got the S&P and NASDAQ closing higher yesterday after 3 straight weekly declines. I don't think this is going to last. Statistics are kind of against it, but anything can happen in this market. And I say that partially as I go into what's going on today in the macro, and that's because we expect a few Fed presidents to be speaking, and they can always move the markets. Although I don't think it's time. They're just kind of managing it. We will be getting existing home sales. I expect those to be low. There hasn't been a lot of supply. So we're kind of more gearing up for tomorrow, which will be the big day. Wednesday, we will be hearing hopefully some news from the BRICS summit. I don't know when. Could be during the market, could be after. We're looking at NVIDIA earnings. They're well anticipated, and people are very bullish on this because it is basically the hardware providing for the artificial intelligence drive. I think it's overbloated at the moment, but we'll see. The market can always do crazy things much more than you think possible. So tomorrow we will also get PMI for the inflation ratings, as well as new home sales. I expect those to actually be high because, as we were saying yesterday, builders are helping buyers with incentives and even in some cases buying down their loan rates a bit. So those have been, new construction has been selling. So on the other side, for reality, we've got a couple of other stories. One is regarding vehicles. So Americans are struggling to pay for their cars, and they're beginning to turn them in. Repossessions are on the rise. And we're kind of watching this stair-stepping pattern down, which I expect to also follow through housing, if you watch how this happens and how it contracts. So what's going on is basically used cars had their prices kind of shot up. So now people couldn't afford the new cars. So now they're going back to used cars because they're less expensive. Well, now a lot of manufacturers have dropped prices on new cars. So now the buyers that are left will go back to new cars, and used cars should drop in their price. Once that happens, just kind of that one each to the other. So we've got, this is actually a very scary graph here, because what this is to the right here, more borrowers with subpar credit are beginning to miss their payments. The spike that you see is the 60 plus days delinquent, and this is from S&P Global. They created this chart. So looking at this is prior to the student loan thing kicking in and a lot of other loans and crushing limits that are about to hit all at once this month. So we got to keep an eye on that. So speaking of labor and the banks, we've got quite a few stories. They all came out this morning. So we've got a major revision in the reporting numbers. And, it's surprising China didn't learn from the US. Instead of just stopping reporting, you can just revise your numbers. So basically what they're doing a payroll revision. And when they do this, it will basically readjust by 500,000 jobs potentially. So we'll keep an eye on that because they're still using this as the data for the Fed that they're looking for as to whether they hike. Makes no sense whatsoever, but that's where we're at. So We are also looking at this story is, I'm showing you this because this is a change in the narrative. This is the psychological game that they're playing, and they are beginning to normalize firing people and letting higher income wage earners go. And basically, what this title is that the company lost $450,000 because they didn't fire 5 people fast enough. And so that's their point of that, is that if you've got people in that just aren't right for the company, fire them right away. So as we were talking about before, and that goes with this 6-figure earner story, they're laying them off 3 times the rate of low-income workers. Companies will do this in order to bolster, as we were saying, their cash and bottom line. So they'll bring up these lower wage workers to do the same job, pay them less, and fire the upper to middle management. That's already starting. Okay, that's the next step towards that deep recession. So with that, as far as labor, we've got GM cutting hundreds of positions. Dick's Sporting Goods lays off 250 corporate employees. We've got Intel, they're laying off people, and Charles Schwab. So Charles Schwab, off Wall Street, planning to cut jobs and close offices. If our economy and Wall Street is doing so wonderfully, why are they laying off? Question for you. Okay, so moving on with our stories to the banks. So we've got what seems like 2 conflicting stories here, and it's only because we need to begin separating things so we can see what is going on a little more clearly. The first story, 3 big banks that pass stress tests with flying colors. Second story, S&P joins Moody's in cutting U.S. banks. They cut 5 ratings amid a quote-unquote tough climate. So they seem to conflict until you look at the size of the banks. So the 3 big banks, they need to call them mega banks. These are mega banks. And then we've got the cuts to the mid banks because they want to eliminate those. So these will be either acquired or merged or consolidated, whatever wording you want to use. But the mid banks will be wiped out. We've also, just like the middle class. And then we've got the smaller banks. A lot of them will be listed as fall guys and cut immediately. And then these assets will be absorbed by the mega banks. So that's what's really going on. So we've got mega banks, mid banks, and the small banks credit unions. Some of those will survive. But the mid banks, they're going to go. Story on housing. It's not really about housing, although this is mixed development. So the developer, San Francisco, has halted the project. This is a $1.2 billion project called Hayes Point Tower, and they have halted this, quote unquote, until markets normalize. They didn't give a date. So this is a really high indicator of serious trouble. So this was mixed use tower, and they're just going to stop construction for now. Okay, so we've got on the other side, we can prop this all up with inflation, keep this game going. How do we do that? Government spending, and we've got more of these that are going to be needed now. You just have to read them. So you don't get a cough, you can go in and get this poke, and you don't have to worry about it. And the underlying story is the cost of each one of these. No American knows really the cost of these. They're northward of $1,000 a piece. They were all purchased by the government, as well as multitudes of these things that were sent abroad. So this very inflationary goes to large pharma, big pharma, and will kind of pump that side. So final story, and I'll let you off to trading. China just showed off a ton of advanced robots. I like how they put this, but there were some tremendous things that went on here. It's not all bad. They did have their robot conference, and I would actually like to go into this more. I'm hoping to be able to get a video out a little bit later today touching on some of this, but very interesting things. So for now, I don't want this to get too long. I wish you all a green trading day, or just a wonderful day in general. I thank you all very much. And if you have any thoughts on the stuff that I covered, please leave me comments. I really need those. I enjoy reading them, and you guys have just been the best. So until I see you again, stay free.